Hmm. Hmm.
Fully wet.
Huh?
Fully wet.
I came in the Uber.
That time it was having a heavy rain.
23rd November. Maybe this one or that one.
It's open.
I think tax.
No, I think this is a.
Yeah, ATX.
This and the one I sent today. You always in the shortcut, no? Recovery from the extreme history.
Right. So that area is not getting flooded. Even a small rain they get flooded, no? For that area, even a small rain is enough to get it flooded. No? That's why I wanted to check what is the condition. Are you in a position to come or not? I will anyway have to come physical because tax fellows are also there. No? So for them, tomorrow would be the last class.
More for them.
They had a very nice request, like if we are at home, we will never study. So keep the class, at least we will do some questions.
I prefer personally prefer Facebook. Online, it makes me a lot.
So I was like, next week exam, so you guys can stay home and study, kind of a mentality. They were like, no, sir, if we stay at home, we will never study anyway. So you keep the class, at least here we will do some questions.
Yeah.
I remember my childhood also. I was like, okay, fine. I was also the same. This time for tax, we have a very good batch.
Very much.
Smart fellows are there from all across the world. I mean, different countries.
I mean, online.
Yeah, others are from online, but physical Sri Lankan fellows also we have a good batch. Online, we have some good fellows from UAE, Bahrain, India. There are some good fellows. Even from Maribu, there were some good fellows this time. So, planning for multiple prizes, hopefully.
And it's actually
Yep. I mean, no, earlier these fellows were doing for Maldives, Mercury, long time back. Yep. Not small, but yeah.
There was some issues happening.
The Mercury was dominating sometimes back. They were
They lost their gold membership.
platinum. They were platinum. They were the only platinum fellows in Sri Lanka.
They were, yeah,
And now they have shut down. So all the other institutes, PPIM, we are from Mercury. And Alpha, they are from Mercury. Is that so? Yeah, sir.
yes.
He's the owner.
But he's very young, yeah. He's very cheap, like,
He started this around 28 or 21 or 22, I think. A young chap, but ready to take the risk, and he knows the business.
That's openly going to be.
He has a good panel, that is his main strength. And he maintains a good bond with the panel. There's a bit of a bond, so we work for the relationship. So he has created that bond. So kind of a different kind of a vibe. So yeah, always it's about how you tackle with people. All these fellows are from Mercury, like Alpha is from Mercury. Only Achievers is not from Mercury. Yep. Only. Okay. How was the place? How was the place?
What pictures? Was there, and they were
Hmm. Excellent.
very,
Who? Shukri is doing which subject?
he was really happy.
Audit. Okay. He's not there anymore. Most of the fellows are moving to A level, no? Even that's what happened to Altaf Fossil. Altaf Fossil is the same thing, right? He also shifted.
Yeah.
He's also A level or something like that. So you're losing good lecturers.
Even I, for me, I felt the most satisfactory definitely is like that's the comment. It's very
So they have the student committee and all place in their place, no? Like events and all are happening, those kind of a culture is there, no?
they have those.
Let's see. How is Asa? Hmm. Yes. Yeah, Nabil Nizam's brother. Okay. Got to know that now only. All right. Okay. He used to lecture as well, right? At one point? No? Okay. I thought he lectured also. Okay. Okay. Hmm. He's a famous fellow. And then Nazar should know you anyway. Okay. Yes. Yeah. So your both brothers are famous characters, man. So you have a target to achieve them. Both of those fellows are famous characters. You have to do a good result, my dear. Knowing those two names, when you have to do a good job. I mean, they are a little. Nabil is anyway a character. So anyway, we speak about Nabil also sometimes when we meet together. Like, so we did in the same time. I think, or he's after. I don't recall exactly. He doesn't know me, but we know him. The ACCA and all now. I'm in the council, so we screen the fellows. Hmm. That you have to do it now. Come on. So you did almost everything in Achievers. Okay, so Alpha, what subjects you did? Okay, go ahead. Okay, that's one lecture at Alpha. That's one lecture at Alpha. That's one now is doing with us. First BR. HBR. Then AFM. AFM. Alpha. So that's very good. He is good. I have to give the honest comment. No, that's very good. Yeah, he should be good. For 8 years, you don't have an option or anything. I think I'm the only one who's doing public lectures for ATX. Rukma. Rukma. Hmm. But ATX, as far as I know, Achievers doesn't have anyone. Alpha, Shahansa is not doing. So then only PPI. That's Tilakarata.
He was doing chronic lectures. So while he called me the time, he called me. I didn't find it long. I didn't find it will be happening for long. It was something else. Because I don't think because I'm the only lecturer. I'm sorry, I'm the only student there. Sometimes they just stop taking.
But here that won't happen because whatever we start, we somehow finish it. We don't put the fellows in trouble. So right now, they're the only student, no, but still we are doing that part. The others are joining. I mean, the recordings are there. So people are using the recording. Even this session, people are using the recorded one. So no one comes to the live class these days. So it's a common thing for most of the professional level subjects. People tend to follow the recorded sessions, which I don't recommend. I mean, at least for the revision, you need to be there in the class.
Yeah, only physical is fine.
True. I mean, if you can't come physical, at least online you should come. Because at least for the revision should be a interactive session.
It has to be ready to understand what
True. Otherwise, it will be very hard.
like it's kind of hard even recording their comments are easier.
Now, for the lecture also, it's hard because we don't know where the students stand. We will just do something recorded. We don't know what the student is doing. I mean, especially professional level, like I always tell you, you need to write, and I need to check that. So that's why I check from the laptop what you have written sometimes, because the way you present is very important. So if you are just watching the recording, I also don't get that feedback. No, sometimes what you are saying might be correct, but you might not get marks if you don't present it properly. So when you're in a live class, I also have that comfort where I can check your answer. Then I can change the way that I'm doing, or if you are doing a good job, then we can improve that. So that thing is pretty important. So that's why I say at least for revision, people should come for the live class, minimum online. So only recorded, I don't recommend that much. If so, we need to send questions to you all and you have to answer to that, then we need to correct your answer. That will never happen, no. I can tell. If I just send you a question, you will never send an answer to that. Okay, so where did we stop in the last? We were talking about, we did last part, right? Section C also we did one question, right? We didn't touch at all. So Riza's one we need to start. We finished Riza. Okay. Then ICA we need to start. Overseas property income and all that fellow.
Yeah, that's fine. So in here, it's
You tried?
but
Okay.
they ask me rising risks and
Remittance basis. Yes.
I remember those. I went through the recording, so office income, so I like kept like
For that, have a small flow chart. So like we'll just I think we summarized last week, no?
office income.
Yes. Okay, we'll try to do a summary. So what we should do is have a small summarized version in your mind. What needs to be done at which point? That's the easiest thing to deal with this whole foreign currency story. Hmm. Okay.
So yeah, I mean, client speaking by tomorrow. Something that going to make client.
Okay.
I spoke to the clients. That's what I think. So the remaining of our planning like that, or like I, so something that when we write something, set
Have to. Because yesterday is the exam. Yesterday, right? An exam also this time a problem. One student messaged me yesterday night. She's from Rinco. And it's a 8.5.
I don't know whether expensive.
No, you have to come to Colombo.
She has come to not big candy.
Candy also we don't have centers now. Only Colombo we have centers. So you have to come to Colombo. So it's from train is 8.5 hours. From bus is 9.5 hours, it seems. The problem is trains are cancelled, and because of the flood, buses are also not working. So it's like I checked with ACCA, so they were like, only thing they can do is refunding. For that, she has to have solid evidence.
Yeah, one thing they can do is that department. Times.
I mean,
Times issue there.
practically they are also helpless. They also can't do anything else. No,
Yeah, hardship.
from their end, they are also helpless. So I just gave the information, like keep the evidence ready, and let's pray that the rain will stop and you can come on it. So she has to come on Monday night if she is doing the exam on Tuesday. Even if she do right now, she can't come because of the flood. So hopefully today and tomorrow there is no rain for that area, and tomorrow afternoon she can come on a train or a bus. That's what we can pray. It's like I am praying that this is true and I can come. There are practical problems this time with the rain and all. I'm pretty sure that's not the only student. There will be others as well. Only one person raised it, but I'm pretty sure there are few who face the same issue because of the flood. Because those areas, flood is very heavily affected. Hopefully, things will be sorted and she can come for the exam.
Or it's not even money the time.
Time is the main concern for me as well. It's a waste of time. No, no, then you're losing the confidence also. No, that is my concern. Like when you miss one exam session, you lose the momentum. These are skills level students. No, the momentum is highly important. Skills level. So momentum is very, very important in that stage. Because when it comes to the professional level, you know you need the qualification. Mostly you are working, so you need the qualification anyway. So momentum is not a big issue. You will somehow fight for that since you also genuinely need it. Skills level, people are getting still used to the culture. No? So at that point, true.
The point where you feel
True. Hard part is skills, I agree. But the thing is, that is the area where you guys are not that committed as well. The commitment is less in the skills level. So that is why I don't want skills level people to lose the momentum. Professional level, somehow you will fight. You went through the question, right? Okay. Then let's go to the study hub and try to summarize.
try to do it. It was like 10 o'clock. I started that question around like 6 o'clock.
Okay.
People are actually the recording.
Hmm.
Yeah, both because we did that question. I was like, really,
Which on the third part?
this year, I don't know why we got it.
Seriously?
I was writing it.
This is a study hub question you are referring to. It's a 50 mark one. 50 mark one. Section A kind of question.
So I was writing in that. It took me a while.
You also vacant till around 1 o'clock yesterday. I was doing some markings of mocks I had given for the tax bills.
Okay.
For us, it's a normal thing. So we are used to that. So let's try to summarize this whole overseas aspect. Hmm?
Very focused on
Hmm.
important.
Then you can easily pass the exam. Obviously, you will easily pass the exam. So I will not walk through this whole classification part, like being domicile, how to decide that. I hope that part, yeah, okay, it's a theoretical area. The tax computation part, let's try to summarize that. So, effect of domiciling is a concern, no? Because in general context, not a problem. If you are a resident, full income is taxable. If you are a non-resident, only the UK income is taxable. So this get complicated when the domicile is also considered. So when the domicile comes into the picture, how does that affect the, what do you call, uh, tax calculation? We'll have a quick look on that. Yes. So if you are a non-resident, generally only the income from UK is taxable. For capital gains also, wait. Even if you take capital gains, generally only the UK ones. But there are few exceptions for that. One, the asset is used in a UK branch of a company, or if it is a UK land, or if it is if the individual is temporary non-resident. In these three cases, CGT will come into the picture. Sure? Right. If you are UK resident and domiciled or deemed domiciled, you are liable for worldwide income. The base is rising basis. So the two bases are rising and remittance. Rising means from right. Whenever the income is derived, you have to pay the tax, irrespective of from where it is derived.
So when the cash is paid, it find the remittance is receiving, that is taxed.
That is a remittance base.
That is remittance basis. Many things deriving from the invoicing.
Yeah, invoicing point or whatever. When you actually create the income, then that is known as a rising basis.
It's kind of like a rupees.
Sort of. So remittance basis means you are sending the money to UK. If you send only, you will be taxed in UK. So these are the two different aspects. So if you are a resident and domiciled, generally you are liable on the rising basis. But you can use what you call remittance basis if your unremitted amount is less than £2,000. That is, apart from 2000, everything else you have arisen outside the country, you have remitted it back to UK. Then you are allowed to go for the remittance basis as well. This is your resident and domiciled or deemed domicile.
Yes.
This is your resident and domiciled or deemed domicile.
It is getting
Only a small 2000 amount will be out. That's it.
when it is rising, it's kind of like they need to get a cash. These people have to pay the tax.
Yeah. You okay with that? Right. Second one is you are resident, but not domiciled or deemed domiciled. In that case, we have a bit of a complicated calculation. Generally, we are going by the what do you call? So, okay, let's take one by one, step by step. So generally, you can go for the remittance basis if the unremitted income is less than £2,000. So if you use remittance in this kind of a situation, remittance basis will become the automatic method. Like whatever you have not remitted, if it is less than £2,000, the automatic treatment would be the remittance. And you can have your personal allowance and AEA as well. You are not losing that. And we will not charge the remittance charge from you as well. So earlier, I mean, in certain cases, we have a separate charge if you are using the remittance basis. In this case, we don't do the remittance charge also. We are clear? Right. If unremitted overseas gains are more than £2,000, if so, you will have to use the rising basis. The default method will be rising basis. If you use the rising basis, you will still claim your personal allowance and AEA. And a remittance basis charge will also be not there for you. And you pay income tax for the worldwide income. Thirdly, you have an option to go for remittance basis, no? Even if your unremitted amount is more than £2,000, you can elect to go for remittance basis. If you do that, you lose your personal allowance and AEA, and a remittance charge will come. So if you have been resident for 7 of the last 9 years, the remittance charge would be 30,000 pounds. If that criteria is not met, then we go for the second criteria. No, that you have to memorize. So 12 out of last 14 years, if you have been a resident, then your charge goes up. It goes up to 60,000 pounds. And if so, you will pay taxes only on the income you remitted to UK. Clear? So if I summarize it, so you are resident, but non-domicile. There can be two situations. Remitted amount, unremitted amount, less than 2,000 pounds. Then the default would be remittance basis. PA and AEA is available and no charge. This is situation number one. Second one, your unremitted amount is more than 2,000 pounds.
By the way, how do we determine this? So,
In the exam, they will mention you. How much they have remitted will be given.
like, let's say it's a property.
Net amount, yeah. Taxable amount. Okay. So it's not that hard. Just that we need to grab the concept.
Yeah, if I just that question is hard.
The thing is, we have to memorize a lot in ATX. True. So here the default is a rising basis. If you use a rising basis, PA and AEA will be given to you and no charge. So no problem. But you have an option where you can go for remittance basis as well. If you do that, no PA or AEA, and there would be a charge. Charge depends the number of years. If 7 out of last 9 years you were resident, then the charge would be 30,000. If 12 out of last 14 years you were resident, charge will go up to 60,000. This is all in simple terms. Are we good? Yeah, that's it in simple basis. So, clear on the remittance part now? 100% sure? Right. Can you try this question now? So, I think we have they have around 3 requirements. Okay, this one we have more.
The big part.
Okay, so A, you have two parts. Calculate the amount of UK income tax he has to pay in respect of the overseas property income on the assumption that it will be taxed at a rising basis. So that's a straightforward one. Second one, explain whether or not is eligible to claim his overseas property income to be taxed at remittance basis. So two basic requirements. Can you give a try? If he's free, ask him to join.
He's not good at that. He's not good at that. Okay, then he's not able to. But
Mhm. You can split.
Maybe. So if we split it, we can take it 20%. Then that's a
Mhm. Okay. Let's see. I didn't go through the question. So she is born in country of Tassia, and she's domiciled there as well. So that means she's not domiciled in UK. Uh, she has been tax resident 19 tax years. Okay. So that means for the last 19 tax years, she has been tax resident. Okay. From 2021, she has been again tax resident in Tassia. Returned to UK on 6 April 24. Okay. To take in salary, I mean, a job. Good. Inherited the house on the death of her father. Okay. Started to rent out this house 1 year, commencing 6 April. Okay. Tax system in Tassia. 25% is charged. No capital gains tax. No double taxation treaty between UK and Tassia. Income, she has a salary of 45,000, 24,000 rental income from Tassia. Uh, she will not remit any of her property income to UK. Okay, so she's not planning to remit anything. Okay, then CGT information is given. She will be a higher rate taxpayer. Okay, company is providing her a house as well. So the details of the house is also given. Fine. UK. The company is in UK now. Let's see what they have done. So employment income they have fully taken. Great. Property income also we need to fully take. No. Agree? Then you can take the personal allowance. So that also we can deduct. Taxable income would be then the net figure, which is 50,430. I think up to that one anyway, you are also in the same page. Hmm. It is the requirement. Calculate the amount of UK income tax overseas. Hmm. Yeah, but why we are taking the this thing also is we need to figure out the gap. Like property income, agree, but when you are calculating the income tax for her, full amount we need to consider, then we can split from that. Because generally the order is when you are claiming these lower rates for income tax, the order is first you have to consider the UK sources of income. After that only you can consider the foreign sources of income. So then first of all, we need to set up the UK tax. Then only we can figure out the actual tax for the overseas income. Yeah, okay. The order is always UK one tax first at the lower rates. On the remainder only we are using the foreign. Always UK one get taxed at the lower rates first. Yeah, okay. So you had a property income of 45,000. No? Against that we can set off the personal allowance, right? This we can do. Once you do that, the balance taxable income would be only 32,430 from the UK part. Agree? The gap between these two would be 32, 430. Correct? First of all, we are taxing that at 20%, which is this one. Then your basic rate band is 37,700. No. From that, we are taking out this figure to figure out how much is balance. So the balance would be 5,270. That means from the overseas property income to 5,270, she can tax at the basic rate still. Correct? So we did that. Then the balance component, like 45,000, 24,000 was there. Out of that, 5,270 was taxed at the basic rate. The remainder is 18,730. That remaining component will get taxed at the higher rate now. So if I take these two together, that is a foreign tax. But you would have paid some amount in ACCA as well, right? For that, yes, double taxation treaty is not there, but we are not going to penalize you. We had a way of giving a benefit for the overseas tax if a treaty is not there. So we compare the amount of tax you would have paid in UK and amount of tax that you would have paid overseas. Out of those two, the lower amount we were supposed to give you as a tax credit. That was also there, no? Correct? Yep. Correct.
So it's basically
Hmm?
calculated.
If the treaty is not there, this is the method. If a treaty is there, based on the way the treaty says, we can do the calculation. So treaty, sometimes they say, okay, one country can tax, the other country doesn't tax. Sometimes we might say, okay, whatever you paid in that country, irrespective of whatever the amount, we give a tax credit from our side. Yeah. How does it works? If there's a treaty, it works based on the conditions that you have agreed in the treaty. If a treaty is not there, what we do is we calculate the tax that you would have paid on the foreign income in UK if it was taxed. Then what have you actually paid in foreign country? We take those two. Out of that lower amount, we take as a credit. We're good. Right. So that is what they have done here. So total overseas component is total of these two, no? Which is coming to 8,546. Whatever you have paid in overseas, yeah, the ASEA, the tax rate is 25%, right?
Basically, we are paying, that's it. She's paying for that,
There she has to pay anyway, no? Because she is arising from that country. So they will anyway tax since they don't have a double tax treaty. Correct? So in ASEA, anyway, she should have paid 24,000 into 25% because ASEA's tax rate is 25. That we can't calculate because we don't know the tax regulations of that country. Because right now we are based on UK. So we know how UK treats double taxation if there is not a treaty. So what UK does is you take the foreign income. If it was taxed in UK, how much you would have paid? If it once you pay foreign tax, how much is the actual tax you pay there? Out of that, the lower amount we give as a tax credit. So that is UK policy. But if you are thinking from other way around, we don't know that particular country's tax regulation, right? UK, this is what we need to do. We take, if it was taxed in UK, how much? Foreign tax is how much? Payment into outside in the sense.
Things like, say, a number. All Where you get take of the
In that case, UK doesn't have a problem, no. Where you send is your problem. Right from UK, irrespective of whether you are resident or non-resident, you have to pay the UK tax based on the UK method.
status
Same as?
as well as like
Yes.
as
Okay, good. Right. So in Tazia, she should have paid 6,000. So once you take it out, the actual tax she has to pay in UK on a rising basis would be 2,546. Clear? Fully okay? Right. Then the second requirement was explain whether or not she will be eligible to claim her overseas property income on a remittance basis. Right for that as well. Right. So what was your answer? Okay.
case.
Okay. Right. Let's see what they're saying. Okay. So these are they have written for that. So because they are asking whether she is eligible or not only. No. So in simple terms, what we can say is remittance basis is available for whom? Generally, it is available for residents no, who are not domiciled or deemed domiciled. So in this case, she is resident and she is not domiciled as well. So applicable for her. But she will be deemed domiciled in UK because out of last 20 years, 15 years, she has been in UK, isn't it? So if you take the domicile rules, now she becomes deemed domicile. If she is deemed domicile, then the remittance was not there, right? You have to pay on the rising basis. This is the first part there. If you are domicile, remittance is not there for you. You are going for rising, isn't it?
And remember what's that?
There can be two methods of being domicile. One, origin.
Okay.
Origin is your father's domicile. The other one is by choice. Once you enter a certain age, like 18 years or 16 years, you can decide where you're going to stay. No? So at that time, if you decide to go out of UK, cut all the connections with UK, like the properties you have in UK, you sell that and finish off everything and you migrate to another country, then you will be considered as a domicile of that country. These are the domicile rules. But we have some deemed domicile rules as well. One of them is if you have stayed in UK, even though you are not domiciled, if for the last 20 years out of that 15 years you stayed in UK, you are automatically considered as a deemed domicile. Not domicile, but deemed domicile. In this person's case, she is becoming a deemed domicile person, isn't it? If you take last 20 years, out of that more than 15, she has been here. Then she becomes deemed domicile. If she is deemed domicile, she is considered as resident and domicile itself, isn't it? If so, remittance basis we didn't allow. No. Then you have to go for the arising basis. Residence basis was given You are not domiciled or deemed domiciled, but resident. Here it's other way around. She is resident and deemed domiciled.
Still, they're saying that UK is in or
That is so resident, but not domiciled or deemed domiciled.
she's been there for 14 years. 6,500 happen.
True, but that is again, this whole diagram we discussed. This one is applicable. You are resident, but not domiciled or deemed domiciled.
Is where
Agree?
saying about
No, what we are talking about is on the top, this part, not on the arms, the heading itself. This whole diagram we discussed is applicable for, so we discussed study hub initially. Then I came to the diagram for resident but non-domiciled. No. So before that, from the study hub we discussed resident but domiciled. If you are resident and domiciled or deemed domiciled, then this diagram is not applicable. No. For that, we had only one basis, that is, if you are resident, automatic one is what you call the rising basis. But if you have remitted everything except for 2,000 pounds or less, then yes, you can go for remittance basis as well. Here she is not willing to remit anyway. No? If that is the case, default one would be a rising basis. Are we okay? So that's what they are trying to say here. So they have,
president and
if you are not resident, then nothing to worry anyway. If you are not resident, it's always a rising basis. If the income is derived at UK only, you have to pay. So three situations: non-resident, resident and domiciled, resident and not domiciled or deemed domiciled. We're good? Can we go on to the next question then? Yeah, sure, you are clear, right? Sure, you are clear? 100% sure? Right. And the next one. In respect of the gift of two painting to Arama, explain by reference to her tax resident status why the disposal of painting one will be subject to CGT in UK, and explain whether it would be preferred for her to give painting two in April 2025 or May 2025 in order to minimize her liability to CGT. Can you give a try? Now be careful about this one as well. Yes, I'll ask them to reduce it. True. We have kept it at 90.
Finish. Takes sometimes takes time to describe it. Can't live out, I feel. Yeah, I know that. Yeah. So for me, typing is not an issue. It's like depends on my form. It's kind of like a form. There's some bug in the form back there. So during that exam time, I can get from that. Okay. Ah, yeah, that is their context.
During the exam, if you can do, no problem. The whole concern is about the exam.
Exactly. That's it. So it's like you have to construct the answer to the mind, right? So it's like kind of getting there and back.
Okay.
So during the exam, what we do is like we have wasn't focused on it, and whatever we have time to somehow.
Somehow you make it then.
Yeah, I'll make it. So in here, I'll be like very slow.
Yeah, sure, in
I
the
don't,
exam
I
you
don't
can
know
make
how
it.
it's like exam. I can type it like
Couple of minutes.
I don't even though I don't know the answer. I here like sometimes it takes while to process and takes it making me blank.
Shall we check the answer then? Okay, first one is about painting one.
I think it's because of like the way I structure the answer.
Plus the
takes
pressure.
time. Yeah, it's pressure.
When it's pressurized in the exam, you know you have to manage within the time. No? When the pressure comes, you work. That means. With reference to the resident status, why the disposal of painting one will be subject to CGT. Okay, let's see. Let's read about the gift first.
I just understood what say is first one. I don't like the thing is he is becoming a resident on 6th April. So it's like what's a government speed?
Dispose. Next year, Jan, 31st. Oh, wait. This is 20. She's selling on when?
He is giving
Giving on to daughter on 1st Jan. Okay, that means up until 31st Jan next year, 2025, you have time.
have that. So it's not will get that. So during that year, like 6th.
This is tax year 2023, 2024, not 2024, 2025.
Yeah,
Isn't it?
2024, 6th. He became a resident.
Yeah.
January 2020.
He's not a resident.
He's not a resident, but he made a gift. So during that 6th month, is it applicable for the entire year?
It's based on the tax year, no?
Yeah.
So for the tax year 2023, 2024, he was not a resident.
But 2024 and
He is a resident.
2024.
No, so when it comes to what you call the residency story, it goes based on the tax year. So the gift is done on 1st Jan 24. No?
Yeah.
This means the gift is done during the tax year 2023, 2024. Agree? Yes. It goes up until 5th of April. So this fellow is becoming resident on 6th April 24, right? According to the question. That means he will be resident from 2024, 2025 onwards. Correct. With this in mind, let's see their answer. The individuals who are resident in UK are liable for CGT all across the world. That we already know. Although she was a resident from 2021 to 2023, 2024, she is treated as only temporary non-resident. That period, yes, she is out, but that's a temporary period, isn't it? Before that, also a long period she has been resided. After that, also now she's coming back for a job. That means again for a while she will be resident.
So it's you think that Russia is a temporary
It's a temporary period that she is getting non-resident.
because the reason she's been here, she's been domiciled there. He's been domiciled there.
Yeah.
And more than
We consider technically she is deemed domicile as well. So resident purpose also, this is a temporary, a 3-year gap only. Before that also she has been resident for a long time. After that also now she is becoming resident again. Agree? It's a temporary period. If that is the case, we have to consider what you call, yes, we have to consider it's a temporary one. So once she returns, we will have to ask her to pay the CGT for this. We okay? That point is good. No, gift holder relief is only applicable for business assets. No, this is a painting. So a painting is not a business asset. No. We're good. Right. For the second one, what was the question for the second one? Explain whether it would be preferable for her to go for painting 2 on 1st April 25 or 1st May 25. What is the difference? Yes. 1st April means you are looking at 23, 24. 1st May means you are looking at, sorry, 1st April 25 means you are looking at 24, 25. 1st May 25 means you are looking at 25, 26. That is the only difference we have here. So technically, she is giving to daughter, no? So it's a corrected person. So loss arising from gift 2 can be relieved only against the gift arising from other disposals to Arama on the same tax year or future tax years. That is also confirmed. No, from IKER, but she is the one who's getting the loss now. So she can claim only on the future gifts, right? Same year or future. Chargeable gains you can't take backward. It's current or future. So whatever the gain that she is getting from, whatever the loss she is getting from paint 2, she can set it, he can set it off against painting 1.
So basically, painting one is
Always IKER, no? Because IKER is the one who's disposing, right?
process of
IKER. Okay, forget about this word here. I think after that you will be fine. Let me cut it down. I think now we are clear. No? Right. Forget about that word. Then we are good. No? Right. So ACCA is the one who's paying and who's claiming the loss as well. The problem here is painting one is from which year? Okay. Yeah. Is it 23, 24?
The capital gains time and the income tax.
Okay, painting to his daughter. 1st Jan 2024. 1st Jan 2024 means it's 2023, 2024, no? Okay. I think they also had made a small mistake there. Because if it is 20, Jan 2024, either way you can't claim the loss against painting one. Because that is you are going backward then.
Yeah.
So it should be 2025 then. Yeah. Gift, the second gift also, the first gift also.
She can get loss, the painting you can get loss from the.
Yeah, I mean, if the painting one also gifted in 2025, then yes, she could have claimed the loss against that. And if you take it 1 month forward, then you can't use that gain to set off this loss. But in this case, it has happened on 2020. What do you call? Ah, yeah, they are just explaining that. Wait. Ah, okay, okay, okay. Hmm. They're just explaining, that's it. So if the second gift, if the first gift is given on 1st April 2020, 1st April 2025, then you can set off against the gain. But if you go for 1st May 2025, then you are crossing the tax, Then you can't go backward and claim. So then you are losing the, what do you call, setting off benefit. That's what all they're saying. But
Yeah, that question is like very gift and
yes.
2023 and 24.
Yep. They are just shuffling around the years. Shit. But have you noticed something? All these answers, they are not typing huge amount.
Short.
They are just attacking to the point with short bullets. Few sentences, but they're picking up the right point. So that is the mechanism that we can use to save time. If we can pick only the right points only, then we are good to go. Are we okay? Right. Then moving on, we have another question there, no? Calculate the additional disposable income available for IKEA for 2025-2026 as a result of providing with living accommodation by the company. You should include an explanation of your treatment of expenditure to the construction of the conservatory. Can you give a try for that one as well?
Right, it was of any extra taxation, whatever. But so any extra income in your hand. What kind of, yes, setting off the tax and any other expense that they are referring to in the question. The net figure that will be remaining in your hand after this adjustment. It's actually can, right? Yeah, yeah. Should be anything. That's why. That's why you're getting a.
Hmm. Yeah, can do. Let's see what they have done. So the question is to figure out the disposable income as a result, I mean, additional disposable income as a result of living accommodation. So if you read that part, the employer will provide her an unfurnished rent-free house throughout the tax year. Annual value is 6,100. They have purchased this house in 2020, okay, for 426,000. Market value is 455,000. For the employer side, this is employer's partner. And will pay 68,000 for the construction of a conservatory on May 2025, okay? Will not contribute to any of the running cost of this house. This house will not constitute a job-related accommodation, right? First of all, can you recall how to calculate the living accommodation benefit? Let's have a recap on that first. I think that is why we are getting a bit stuck in this one. So if you take living accommodation, there are three kinds of benefits you are getting. First one is known as basic charge. So basic charge, we take the higher of annual value or rent paid by the employer. So that means if the house is owned by the employer, it will always be annual value, right? Because if the house is owned by the employer, he don't need to pay rent for anyone. Correct? So in this case, house is owned by the employer, right? If so, in this case, this will not be applicable. Agree? Right. Second one is known as additional charge, or we used to call it as expensive accommodation as well. Here, you have few steps. Step 1, check the time gap between date you gave the house to the employee and the date of acquisition. So acquisition date to occupation date. When has the employer acquired the house? And actually, no. First step, let's do another way around. That will be more easier for you to remember. First test, check the value of cost plus capital improvements. Then there can be two scenarios. No? Answer might be less than 75,000. Answer might be more than 75,000. Can be one of these. Can be one of these. So if it is less than 75,000, we say there is, oops, no living accommodation. Sorry, no additional charge. Check. If the answer is more than 75,000, then you have to go for the second step. That is the time gap. Between time gap between the date of the employer acquired the house and the date on which the house was given to the employee for the first time. If that time gap is less than 6 years, you go for cost plus subsequent capital improvements. Sure. If the time period is more than 6 years, then you go for the market value plus any subsequent capital improvements after the market value date. We okay? I'm not referring to the question yet. Still we are on the theory. So either way, you will get an answer from here. From that, deduct 75,000, the limit. In brackets. Then you will get a gap no? That multiplied by the official rate, which is 2.25% for our tax year. Okay. So that is the what you call additional charge. But whatever the improvements we are doing within the current tax year, we don't consider for now. Next year only we will consider that. The improvements during the current year, we don't consider. Okay. Third main component is ancillary expenses. These are like council taxes, water bill, electricity bill. Those will also come under the same thing. Apart from that, if the house is furnished, then furnished value into 20% will also be get added. We're good? Summary is fine.
Basically,
Mhm. No, actually we have, sorry, I joined to the wrong line. Ancillary expenses should come here. Furniture also should come here. Living accommodation has four components: basic charge and additional charge, ancillary expenses, and furniture.
for these are like payments.
Yes, parts of living accommodation.
So basic charge means whatever the rent, not the rent, I mean the
Rent paid by the employer or the annual value.
well,
Out of that, we take the higher amount.
so and which are the cost of their incurring expenses incurring on the property.
Cost for the employer to purchase the house.
So what's the between that basic charge and minimum charge? Basic charge is like rate.
Basic charge is more or less like a revenue component. Like we are comparing two numbers. One is the rent that you pay, that you in the sense employer. Second one is the annual value. Annual value is not a cost. Annual value is just an assessment done by the HMRC on the value of the house. Which is in Sri Lanka we have Varipanam. Sri Lanka we have Varipanam rates. For that you would have seen some assessment figure they are giving. Takseru watinahama කියලා. Okay, just check that. Should be there in your book. So there would be this assessment figure. It's a very nominal value. Something similar only the annual value. It's a very nominal figure that is given by the HMRC itself. Sure. So this basic charge, this component has nothing to do with your cost. Not your cost, not employer's cost. It has nothing to do with that. Clear? Excess.
Plus
Subsequent capital improvements. If it is more than 6 years, market value plus any capital improvements done after the market valuation date.
so this is giving them the house benefit like for government part.
It doesn't matter permanent or whatever. If you get a house from your employer to use while you're employed, we are considering the living accommodation benefit. 2.25%.
So that will be the benefit amount.
Yes.
So 2.25% is the standard.
Standard fee. Yes. That's the official rate of interest.
I think it's like many things to remember more than the logical aspect.
Logical aspect is also there, but logic is linked with the things that you need to memorize. Okay.
And remember that
Ancillary expense came in this year, but it was there in the tax revision part. Basic charge and the additional charge was there. Additional charge, they used to call it as expensive accommodation those days, but it's the same concept, though, just the word has changed. From expensive accommodation to they have come to additional charge. The basis was same. Those days the rate was 2%. The rate has increased to 2.25. There is a pass effect there. F6, yes. Are you okay? Sure.
Yeah.
Right. Now let's see what they are trying to say. Or we didn't read the full question, sorry. Living accommodation part we read, but there's another part, right? Yeah, cost savings. On 6th April 2025, when his rental agreement ends, IKEA will move out of his current living accommodation and into the house provided by Laudio Limited. So now from her house, from his house, he's shifting to the living accommodation. So the regular outflowings for the month is rent 1,100, running cost for heat and light 700. IKEA estimates the relevant running cost of the house to be provided by the Laudio Limited will be 5% higher than the current accommodation. So that means the 700 will be 700 into 105%. Correct? Right. So we know the details there. Now let's see how to tackle with it. First of all, if you don't shift to this house, you have to pay rent, right? That is 1,100 per month, that into 12, 13,200. You would have paid a rent. Agree? Plus, you will have an additional cost now. Earlier, the cost would have been 700. Now 5% increase is also coming into the picture. So 700 into 12 into 5% is the excess that you are paying. 700 you were anyway paying now. So that doesn't impact your income, isn't it? That you are anyway paying. The additional expense would be only 5% component. Agree? So that also we took. But you will have to pay an income tax expense for the living accommodation that you are getting from the employer. So then they have given a working to calculate that. So annual value, sorry, they have taken annual value 6,100. Additional charge, they have taken 426,000. So what is 426,000? That is a cost itself. Why? They have purchased in 2020. We are talking about 2025. So you have not exceeded 6 years. It's within 5 years. So that is why they are going for the cost instead of the market value. Yeah, okay. Cost minus 75,000 into 2.25, like I said. So altogether, the living accommodation benefit would be 13,998, and the fellow is an higher rate taxpayer. So we multiply by 40. So he would have paid a tax of 5,599. That is also an additional cost coming into the picture. So that also we need to deduct. So we deducted that as well. Even after doing that, still you have additional income of 7,181. Are we good? Same thing you need to explain a little bit here. Conservatory expenses part, like that 68,001. It is happening within the current tax year. Therefore, we do not consider it for the living accommodation for the current tax year. Yes, that will impact your next tax year's additional charge. Correct? That you just need to type. That's it. Are we good? This was there. When did you do F6? When did you do F6? Yeah, that time was I was lecturing at PPIM itself, so it was there. I was lecturing for a long time, but at that time also I was at PPIM. It was there. I can vouch it was there.
I can remember the property income side, benefits and
Benefit came under the employment income. So are we okay? So we did one full paper. How is your confidence level now? That is important thing. Look.
Still I can show you.
After Wednesday, we can 100% assure about what is the C2. So what's the exam slot you got? Exam slot. Time.
130.
1:30. Center?
Voices.
OSIS. 130 is a good start.
That's why I thought 20. That's why I'm like, revision, then I have to, I went through the revision and all that. These few weeks I was focused on the advanced professional level. Till touch on the revision page.
Don't worry, you can do. Have trust. But only thing, be very mindful about the requirements.
Yeah. So in here, like certain things like addition is it's not what they're saying. Yeah, I know what's saying, but I don't know like from where they are not giving like where the income is arrived. In this case, it's like two options like in the latter part of the game.
So ATX, not like tax where you can read the requirement, then match it to the scenario. That will be hard for ATX. Tax, yes, 100% possible. And I always advise to do that in tax. ATX, that is hard. Throughout the scenario, there can be certain information. Section A, yes. You can match exactly to the requirement to the paragraphs in the scenario. B, hard. Even in this paper, when we were doing A, I was matching. First requirement, from that I went to the scenario. B, I didn't do that because B, that is hard.
Because same time it's running one flow like
Exactly.
that's it. So how do we like you need to read the requirement and you can't go like the A section A approach.
Ah,
We take that.
bit risky, yes.
That's why
Just the headings is fine. I mean, now if I come to here, this is a scenario, no? So to identify from which areas you need to pick the data, you don't need to read the entire scenario. Now from this one, by face itself, when you say IKEA and when you see first two sentences, you can see, okay, the fellows are talking about the residency status. Second one, obviously, because lack of practice. This is the first step you are doing now. So you have to practice few questions. Then only you will get the hang of that. If you don't practice, it will be hard. So the only thing you need to do right now is practice and revise. F6, don't underestimate. So what you had on this last part is pure F6. It has nothing to do with ATX. The last 5 marks you had 100% tax. Nothing to do with ATX. So don't underestimate the F6 part. That's the other mistake people do. I have met a lot of students, it doesn't matter whatever I say, they focus only on the new chapters coming on the ATX. So I usually focus more on the F6 because the new things are coming on ATX, for that also base is F6. If you don't remember F6 and if you don't follow up with F6, just by studying ATX part, it will be very hard for you to tackle. Because the ATX part is also derived through the F6 part. Plus evidence. This is a past paper. One full question is from F6.
Yeah.
Entire 5 marks. Nothing to do with ATX. Not even 0.5 marks from ATX for that. So can be the case in the exam also. So don't underestimate the F6. This is a mistake people do. They purely underestimate the tax, the F6 part. Whereas the examiner doesn't do that mistake. Examiner is that. Are we good? Right. So we'll stop at this point. It's 12 now. So anything, just reach out to me. You have only 3 more days.
I'm taking this.
So focus 100%. I think now you are on study leave. So focus 100%. Whatever happens, go to the exam with confidence. You can nail it out. So confidence is very important. So whatever you do, go out to the exam with confidence. Don't step back. So good luck then. Keep me informed with the paper and the results board. Okay.
So,